Welcome to Setting Up and Protecting Your Business. This is presented by Nationwide and Ohio Farm Bureau. We're the lead sponsors for this conference this weekend and excited to bring this topic to you. So a little bit about Steve Hamilton. He's a technical director with our advanced consulting group. He has over 30 years of experience in the financial services industry. He was actually raised on a farm in central Iowa and still has ownership interest in the third generation family farm. He specializes in farm transition planning, as well as estate planning, business succession, and IRA annuity distribution options. So he's going to go through several things today. If you have questions, Mona Lisa, feel free to put them in chat. Obviously, we're a small group, so we're going to save some time at the end. So keep in mind what you want to ask, and we'll try our best to get to those at the end. So Steve, I'll hand it over to you, and thanks again for giving us your time and expertise today.
Yeah, thanks. I appreciate it. Just so you know, my training is largely as a lawyer. I do have a law degree and I did practice law briefly, but I've been in the financial service industry for a long time. And at one time I actually did sell insurance. So, but I am not an actuary. So, and I'm not an underwriter. So there's areas there that I know a little bit about, but I am in no way an expert on those things. We're talking about risk today. And you think about, this is 9/11, and I'm sure there's a lot of people that got up in the morning of 9/11 and didn't comprehend some of the risks that were going to take place on that day. And you think about what's happened over the last year and a half. I don't think any of us expected in January of 2020 that there would be a pandemic that would really change a lot of people's lives. And a lot of us, including myself, are working primarily from home nowadays. So these are things that happen. We can't account for everything, but we do know that we have risks that we have to live with every day. We have to always go through some disclosures here, and I just want to touch on some things briefly. Is I'm not here to provide specific legal or tax advice to your situation. I'm going to talk in some general terms, hopefully give you some information. I will probably raise some questions, which is good. And there's some of these questions you're going to have to get from other people. I'm not going to be able to answer them for you. And that's a good thing, because if you don't ask questions, you don't get answers. And so if you can raise the question, that's great. I'm not here to provide you with a 12% return on something with no risk. I'm not here to do that. And if somebody is trying to sell you that, I would run away from them as quickly as possible. Nationwide does have a background in agriculture. It's a very, and farm bureaus, which we are tied to, started back in 1909 in the state of Iowa, which is where I grew up at. Back in 1909, got an insurance company going to provide for farmers insurance. Ohio Farm Bureau joined the act in 1926. Where with a $10,000 loan, they set up an insurance company to provide for those who are involved in agriculture. By 1955, they had grown so much that they changed their name to Nationwide, and that's how we know it today. But Nationwide has continued to grow. And in 1982, they acquired Farmland Insurance, which was one of the oldest leading insurance companies for agribusiness at the time, and that became a part of Nationwide. And in 2011, I was fortunate to be part of the Land Is Your Legacy program, which was designed to help farmers and ranchers begin a program to transition their businesses to the next generation, so that we wanted to see farming continue, ranching continue, agribusiness continue through the families to the next generations wherever possible, and however we could help them do that. Today, we are a #1 farm insurer, and we offer a full range of products. We are a Fortune 100 company. We are highly rated because we do carry reserves. We are always looking towards the future and how we could do things. We actually did, I think, exceptionally well when we had to move a lot of the workforce to home. We had things in place and continue to look at ways that we can improve our ability to serve the customer and provide the products that are needed today and into tomorrow. I touch on this slide only because it's part of our Land Is Your Legacy program, which is a separate program. But we're talking about risk because that's one of the things that has to be discussed about, and that's going to be that's the focus of today. And so risk is an important element in dealing with ranching and farming and agribusiness. Our introduction is see what we're going to talk about is reducing some of the effects of risk and looking at some of the primary sources of risk. So, like I say, I'm talking a little bit fast as we go through this because there's way more material than there is time to talk about it. But one of the things I encourage you is to look at what your risks are and talk to the people that are relevant to those things. The extension services have amazing expertise and materials and stuff that are out there. And I often forget myself what they have, and I go out and I can find some really excellent materials. And so I would really encourage you to take advantage of whatever extension services are available, what the universities are offering. That stuff is low cost or free. It's just a lot of work has gone into those things and it can be very helpful. Obviously, with the topic we're talking about, insurance agents, getting a hold of an insurance agent who understands farming, who understands the type of business that you're in. If you are going to have people on that property, then it's important to understand, okay, what kind of protection do we need for this? And we see more of that happening within agriculture, where people are, farmers are inviting people on. And so we got to make sure we have the right coverages and we cover the risk. When you start talking financials, we're going to touch on that even a little bit today. Then having the accountants, the CPAs, the people who understand the numbers. I'm not a numbers person. So that's why I went to law. Lawyers understand many times the risks that you're facing. And I encourage people when they're starting to do something, you know what, go talk to the attorney. Find an attorney that you can work with, who you can get a relationship with, and try to understand what you can do. Because so many times, it's like a lot of things in life, we don't go to that attorney until we got problems, right? Well, let's go there ahead of time, maybe spend a little bit less money, a little bit less time, and try to set ourselves up in a way that will prevent problems in the future. And we could be talking about disclosures, disclaimers, hold harmless agreements, things of that type that can be very beneficial in helping you stay out of trouble, or at least minimizing issues when they come up. Consultants, whether that's crop or livestock, there's consultants out there who can provide you with expertise. Livestock nutritionists, marketing specialists. I know my dad used Pro Farmer when he was alive, and marketing, he would use them as well as some other resources. And lenders, we often don't think about this, but lenders can provide you with a lot of guidance as well on what they're looking for, and say, well, you're good risk, we would lend money to you. And sometimes there's people that aren't such good risks and they won't lend money to them. And so it's a good thing to understand what it means to be a good risk to a lender and how you can situate your business so that if the time does come and you need money, you can get it financed, and financed hopefully on the most favorable terms. Production risk, for those of us who are involved in producing actual crops or livestock or putting a product out there, we know there can be uncertainties with that. You could just ask the Midwest farmers last year, which actually my dad's farm that my brother-in-law is farming was hit by that derecho that ran through. I never even heard of a derecho. I grew up with, tornadoes coming through there, but in thunderstorms, but I never heard of a derecho until last year. And obviously we have Hurricane Ida that's come through as well. So these weather concerns are issues that we obviously have to be prepared for. But if you have grain, especially pests, may come into play. I know I was listening to the radio and they're talking about army worms coming in and just absolutely destroying farms. And so these are things to consider and look at. Diseases. Again, I was in Iowa driving through, and there was a disease going through these chicken confinement setups and just wiping out entire flocks of chickens. And many times what they have to do, once that gets in the building, they have to kill all the chickens. That's the only way to deal with it. Technology changes, we need to stay current on that. Genetics, I was just reading about a genetic change. They're looking at using the modified seed. That's going to increase seed production by 50%, going to increase yields by 50%. That's just amazing when those things happen. And then improved efficiencies. These are all things that can influence what's going on production-wise and what our risk. Now, it says there's 3 options on this slide, but I'm going to tell you I'm going to say there's actually 5. One is you can just ignore it and pretend it doesn't exist. And sometimes we do that in life. You know, it's like, well, I'm just not going to talk about it. I'm not going to think about it. And you need to identify it. So that's one option. I don't advise that option. I would tell you not to use that option. Another option is to avoid it. And what I mean by that is to say, okay, I understand there's this risk and I'm just not going to participate in it. I'm going to stay away from it and not participate in that particular activity because the risk is too high. And there's nothing wrong with that. That makes sense. Oftentimes to say, you know what, I just don't want to get involved and I'll stay away from it. I'll avoid it. But we'll talk about some things that you can do to reduce variations in production and income if you're actually involved in those things, or some better management practices that you can put in place so that you can say, okay, I'm going to reduce the risk by the way I manage my business, by the things that I do. Or you can transfer risk. This obviously is where the insurance company gets involved many times because you're going to look at it transferring risk to somebody else. You'll say, okay, I can take on the first $1,000, you know, if something happens here, or 2,000, but you know, if it's $100,000, no, I can't take that on. Somebody else is going to have to take that risk for me. So diversification is one thing that you know, you can take if you have different activities that are going on. I think back when my dad, I mean, farming used to be much more diverse, I believe, than it is today. My dad had row crops, corn, soybeans. He had alfalfa. He had oats. He had a small cow herd. He would feed out the calves. He would buy some yearlings and feed them out and sell them, and also potentially have some hogs on occasion there, but a very diversified farming operation. And so if the crops weren't profitable, he was hoping that the beef end would be profitable. He was able to try to cover some of that risk with the diversification he had on the farm. The thing about that is that means that you are expending a lot of time, money, and resources across a lot of things. And therefore that can entail quite a bit of capital investment, especially with the cost of equipment and things today. But that's one way of saying, okay, how can I maybe diversify to help cover my cost and expenses if one thing doesn't do well? You can look at alternatives. And I see this happening, you know, really all over the place, really, where people are saying, you know what, we are going to have an on-farm business. We got acreage out here. And so why not use it to put in a pumpkin patch and have people come out? Or why not do the corn maze? You know, I think I drove by, I think I was in Michigan someplace, said the world's largest corn maze. I've got the land, I've got the corn, you know, why not do that and bring in some additional income? I live on 10 acres, which we just purchased a couple years ago. And we are selling a little bit of stuff at the farm market that's coming off the garden. But my wife has set up a sniff spot thing, which I never even heard of, which is a place where people bring their dogs and they pay to have the dogs run around in the area. Again, a place, you know, some way to make some money that's not tied directly to production or farm production. But also what we see a lot of, I think anymore, is off-farm employment by, especially if there's a couple, where one spouse is working off the farm, they've got benefits, and so they get their health insurance, they get the life insurance, they get the disability insurance. That many times will get all the benefits they can for themselves and for their spouse through that employment. And that helps provide some stability, reduces some risk because they've got the insurance products that are in place there. And that is a very common thing that we see, as well as some people that are working off the farm, but still have the time in their schedule to do some farming activities. The other thing is just maybe better savings and investment practices can be put in place to make things a little bit better and to help cover some of the risks that may be out there. Production capacity. This, you know, when I think about this, again, I think back to my dad's situation. He often had a hired hand. And so if you can't plant, and which usually there's a window when you can plant corn, and there's a window when you can plant soybeans. There's a window when you can plant certain things. And if the weather doesn't cooperate or things are going wrong, then you many times are going to need an extra person and need maybe an extra piece of machinery to go out there and say, okay, we're going to have to run, you know, we're going to have to run 24 hours to get everything in. And so we're going to need an extra person. And maybe two of us, if we have the right kind of equipment, maybe two of us can each be working. But having some excess capacity, but again, that comes with a cost. And everything we talk about, there's going to be pros and cons. I don't want you to think that there's a panacea for everything, but you need to kind of weigh what those are, look at your operation and say, okay, we've got extra people here. We can do some extra things, possibly if we need to. Specialization is something that I've seen happening, and I think most of us have seen happening around the countryside, where the farm that I grew up on had all that diversity on it. Now it is row crop. That's all it is. It's corn and it's soybeans. And by increasing that specialization, then you only need the planter that can cover those row crops. You got one planter. You can use one combine. You may have different combine heads, but you've specialized it down to the equipment. You don't have to have, we don't have tomato production. We don't have orchard production. Those things all require certain types of equipment that cause you to specialize. And so that you can narrow down what you have, but you also need to realize that when you specialize, and if you decide that you want to do something else, then you can't use that equipment for other things. And you're going to have to buy additional equipment. So specialization is restrictive, but it can lower cost and keep your talents and abilities focused on one area. But again, you have the risk that if that goes south, if corn prices drop, soybean prices drop, let's say, if all you are is row crop, then you've got some issues there, obviously, with economics. New technology, better and more efficient equipment is coming all the time. I keep hearing about self-driving tractors and self-driving combines. It's going to be possible for farmers to maybe just sit in the office like I'm sitting here and look at a computer screen and control the combines and the planters and everything else that's being done. We aren't there yet, but the technology is already here. And the technology on improving yields, I already referenced that. But technology many times means higher cost, right? Also means that sometimes we get into a technology and it becomes outdated and the technology goes someplace else. For those of us that are old enough, you remember Betamax, which was considered to be a better technology for watching videos than VHS, but it ended up becoming obsoleted. So, and then just the learning curve that goes with any new technology that's out there, and then just the unwillingness of some people to say, you know what, I'm just not going to bother at this point in my life, or I just don't want to learn it. Transferring risks. This is important because if you identify the risks that you have, and then you understand what those are, then you need to start thinking about, well, how can I transfer them? And we're going to spend some time talking about transferring these risks to the insurance companies or maybe in other means. But you can, if you have crops that you're marketing, if you have product that you're selling, you may look at doing what they call contracts, going out and buying a futures contract and knowing what that price is going to be at the time that you maybe want to deliver that product. Or you may look at options, puts and calls, ways that you can help deal with the risk in marketing those crops and trying to provide some stability in the pricing that you're going to get for that. If you're looking at other types of liability, which we're going to spend more time on, property and casualty insurance, health and life and disability insurance, and liability insurance, especially if you have other people who are there who may be coming on the premises and doing things on the premises, liability insurance can become a very, very important insurance to have. You look at all the coverages that are out there for farm insurance, and I know this is overwhelming. You look at this, go, wow, there's a lot of stuff out there. And that's why it is important to find an insurance agent who understands farming and understands what you're doing to make sure that you have the coverages that will protect you and protect the business that you are in. We look at the base farm policy. It's going to cover the building that's there, the home that you're living in. It's going to cover your farm, personal property. It's going to protect your farm structures that you have that are out there. And this is crucial because I don't know how many times I've seen this happen. Literally, had a friend, and they weren't involved necessarily in farming, but they put a nice big building up behind the house. That building unfortunately burned down. they found out they had coverage under their homeowners, but only for 1% of the value of their homeowners insurance, because they never talked to the insurance agent and said, we need to have this building specifically insured for its full value. There was some coverage, but not the coverage to cover the complete cost of building a brand new building. And so if you're putting buildings out there, you need to make sure the insurance agent comes out and looks at it. Farm liability insurance is absolutely crucial. We're going to talk a little bit more about that. That's out there. But you're going to look at packages that are going to be basic, broad, which is going to be obviously a little bit broader, and special. Because if you're doing some things that are specialties, especially if you've got an enterprise that involves inviting guests on, serving them, having them do things there, that's a very special type of insurance that you're probably going to want to watch and look at. And so when you look at an insurance product, talking to the agent, because sometimes, trying to read an insurance product, it's kind of like reading Greek, right? There's a lot of stuff here. It's a lot of legal stuff. Agent, tell me what this means. Ask the questions. What's excluded? What is not included in this coverage? And you say, well, wait a minute. I have to have that covered. If that happens, I got an issue here. And that's why you may add an endorsement on that coverage, right? An endorsement says, okay, we're adding this on to protect against this type of an event. That's maybe something that's kind of specialized to your own specific situation, and you may need an endorsement to cover that. So if you look at some of the liability that's out there, liability is going to protect you from that typical slip and fall situation. Somebody comes on the premises and they get bitten by the dog. Those kinds of things where you may get sued, you want to make sure that you have liability coverage for your premises. You also want to make sure that if you actually are operating a farming operation, that if something happens as part of those operations, whether you're driving the tractor down the road or you're hauling something down the road and something happens, that's all part of the operation because you're doing it, then make sure that you've got coverage for that. Product liability, if you're selling something, and I know people who have integrated like the dairy operation so that it not only produces the milk, it produces the milk that's sold, it produces ice cream. It's an integrated process from start to finish, and therefore they are producing a product that people are walking away with. They have to make sure they've got some liability in case that product for some reason gets a bacteria in there and begins making people sick, so they protect themselves from that. And I think many of us are now aware more than ever of pollution and what that means. And if this place has underground tanks, those need to be removed. We got to remediate any kind of pollution on that property. And not only are we talking about, maybe the fuel that's there, but if there's chemicals being used, fertilizers being used, anything of that sort that may somehow be a pollutant. Many times a pollutant could be something that if it's applied to the field, it's used properly, that's fine. But if it gets into the creek, it may not be fine. And so understanding what those issues are and protecting against pollution, because again, you don't want the EPA coming down on you, or maybe somebody down the road suing you because you've polluted the water. Marketing risk. If you do have crops or production, livestock, then you understand that those prices will fluctuate. And so how do you manage those fluctuations? And we know that you have to deal with all kinds of variables. I touched on weather, but also government actions. If the government decides that they're going to boycott a certain country and you can no longer sell overseas to that country, what does that do to your market? What about the prices of other commodities? We'll see that if some things go up in price, that people will refuse to buy it. They will buy something else that they can maybe utilize in its place. And you think about all the kind of cooking oils that are out there. If soybean oil suddenly becomes expensive, people might purchase corn oil. They might purchase canola oil or some other oil instead. And then you have currency values, especially if we're selling overseas and what's going on in the marketplace there. If the dollar has gone up in value, that typically means that we can't sell as much overseas. If the dollar is lower in value, that means that consumers overseas maybe can buy more. But our agricultural markets are increasingly global. I remember growing up, my dad was always interested in what was going on in Brazil, because Brazil does raise a fair amount of soybeans and corn, and what they did and how that market could impact the US market. having a marketing plan in place to understand what you're going to do. So you're saying, okay, when am I going to sell? When am I going to do that? What kind of a price do I want to sell for? What about the quality of what I'm selling? Sometimes the grain comes out, it's too wet, we have to dry it before we sell it. But we also know that if we leave grain stored too long, that things may happen to it as well. So we got to make sure we protect the quality of it so we don't get docked on the pricing of it. Understand the pricing that we're going to set it for. We may again go out and do options. We may go out and do futures contracts. But what price are we going to sell it for? Are we going to use a service? And when are we going to deliver it? Are we going to keep it on the farm? Or are we going to keep that grain at the elevator? How are we going to deliver that product? And the point of this is to have a plan in place, because if you don't, what's going to happen is the two things that disrupt any investment or any management many times are fear and greed. If you let fear or greed take over, you will end up making the wrong decisions. When you don't have fear and greed, think logically, put a plan in place. You can always be flexible, but know why you're making changes to that plan, and don't let those emotions disrupt you. Financial risk. There's always financial risks that are out there. If you've got to go out and borrow money, what's the cost of that capital? We have been for an extended period of time in a situation where really going out and getting loans has been very low interest rates. I came into my profession back in the 80s when interest rates were sky high, when they were in the teens. And that's what I initially remember and what that did to the marketplace. The one thing I'm concerned about with these low interest rates, and as you look at what you're going to be doing out there in the future, is if you're borrowing the money, is it being used properly to create efficiencies, to help you put in place things that will enable you to weather economic storms or things that may happen? Because people, I think, may be borrowing money instead of improving their practices. If they're only borrowing it to get by when things actually do get rough, then they may be out of business. And I saw that happening back in the 80s, where a lot of farmers went out of business because they borrowed money and then things went south economically for them. Make sure you have the cash flow that meets the needs, and then maintaining and growing equity. You want to make sure that over time, you're actually increasing your net worth, right? You're not losing it. And making sure that you have things in place that if there are short-term financial shocks, that you are able to weather those things. You have put things in place, whether it's the insurance we've talked about, or maybe marketing plans, but look a little bit at the financial records. These are things that typically your lender is going to look at, or because they're going to say, look, if I'm going to lend you money, if I'm going to be involved in your business, I want to know how you're running this business. I want to know what it looks like economically. I want to know from your balance sheet, what do you have for assets? I want to know what you have for liabilities. I want to know what's happening. I want to see an income statement that shows me that you're showing some profitability over a period of time. If you're asking me to invest or to donate to what you're doing, I just don't want to see money going down a rat hole. I want to make sure that's being used in a proper manner so that's getting a return on it, whatever that kind of return may be. And a cash flow statement reflecting cash inflows and outflows for a specific period of time. And statements of your equity so we can see how you're doing. Financial ratios are something to look at. And again, this is getting kind of technical and geeky, maybe a little bit. But again, if you're talking to lenders, can be very important, because if you can start talking in these terms to them, they're going to say, this person knows what they're doing. They have an understanding of economics. And that's important for any business. I don't care what it is. And you just simply divide your assets by your current liabilities. You can see that the ratio there is desirable at 1.7. Working capital to gross income. Working capital is going to be your current assets. That's going to be your cash, your accounts, receivables, goods, crops, minus your current liabilities. And looking at that, that gives you a ratio which you want to see at somewhere around 25% or 10 to 25%. Debt to asset ratio, the share of business owners, what it is that they actually have, what's the ratio that they actually have that is theirs, that they can say, okay, this is actually what I have that's mine, and not the creditors, not somebody else's, but actually mine. As we get kind of near the end here, because I need to wrap this up so we can prepare for the next group that's going to be coming in here, but legal risk. Substantial legal risks that are out there, especially if you have other people coming on the property. Contractual agreements. Do you have disclosures, disclaimers, hold harmless agreements, so that if something happens on the property, that you invited somebody in and this is what we're doing, and something happens, that you aren't going to get sued for it. At least we can mitigate maybe that action that may be taken against you, the liability exposure you have. Setting up a business organization can be crucial. If you're going to be having people on your property and you're going to be operating a certain type of business, setting that up as a limited liability company or as a corporation that has its own separate liability to protect that entity from your personal liability, or vice versa, protect your personal assets from the liability exposure in that enterprise, can be very important, because then that way you can protect yourself from the actions of what transpire within that business. Always be aware of laws and regulations. They're always changing. And we find out sometimes that what was legal now is not legal later. Tort liability, we touched on that a little bit, but making sure you have insurance, have an umbrella policy that covers, if that catastrophic event happens, that you've got coverage over and above what else you might have. And remembering public policy and attitudes. Those things can often change or cause issues. What may be acceptable today may not be acceptable tomorrow. And if you have a farm that's out in the country, but we now have suburbs or we have development coming in around it, all of a sudden people started having expectations about what should be done and how you should operate. Things that you have to be aware of. And as I begin to wrap it up here, I always want to touch on family situations, because if there's family or other people involved in this operation, in this business, you need to make sure that you're dealing with them appropriately and they understand what's going on. Understand that there could be divorces, retirement, there could be people leaving for specific reasons. What I tell people within the Land Your Legacy program is diagram out the family members that may have a connection to this. Put in the people that are involved in this business and begin to ask yourself, what happens if, and address that with each one of these people. Because we know death, disability, incompetency, health issues can all impact, or maybe just somebody wanting to get a break for a while, can all impact the business that you are involved in. If you're looking long-term, we know that it's important to have an estate plan in place, succession plan in place. Unfortunately, only 50% of the people out there have an estate plan, and 71% haven't even identified who would take over if something happens to them. The idea is if something happens to you and you can't get up tomorrow, who steps into your shoes? Who takes over? Do they have the knowledge? Do they have the training? Do they have the ability to step in and keep that business or operation going? So by setting up a plan, you can reduce your liabilities and exposure. You can distribute the desired assets to the people you want, when they want, or when it's needed and how you want them to receive it, and assure that business could continue into the future. That's really kind of ultimately the end risk, is where you want things to go at the end. So I thank you for your time. Here's some important information, because if you want further information, we have a direct number here that you can contact or go out to Nationwide's website. But for farm insurance questions, farmagentfinder.com is also a great source to go out and check out. These are resources that you should be checking out if you're looking at what you can do for insurance and making sure you have the protection you need. So with that, I think we'll open it up for about 5 minutes or so for questions. If there's any questions, go ahead, and Shonda. Working on the mute. I think it's down at the bottom. No? That's what we love about technology.
Sorry, I missed that. Steve, who are we trying to unmute?
Oh, Shonda.
Okay.
Well, you're the one in control. I'm sorry. Sorry, David. Well, whoever's looking at the queue, are there questions out there that we're taking in, or that? Okay, let me look here. Yeah, so it's not allowing me. I need to look up the chat here, don't I? Maybe I can read there. Okay. Mona Lisa, thank you. I got you'll be contacting the agent. Well, thank you for the correspondence there.
I'm
What else
finally
do we
off
have
mute.
here?
I could finally,
now that I'm reading,
yeah.
yeah, I don't see any other questions really here.
Anyone else? Feel free to chime in the next few seconds.
If I may, I didn't know how to write it. I guess my question is, Steve, you mentioned at the beginning, like contacting an attorney for waivers and stuff of that nature.
Yeah.
Are there waivers that protect you or lower the insurance bill? Does that make, you know what I'm talking about?
Yeah. My guess is that if you're talking to an insurance agent, you're telling them what you want to do, they may very well say, yes, we need to make sure that you have hold harmless agreements in place, so that they may want those things in place so that you can get the insurance that you need. So that's important. And I would say, especially in your situation where you probably are going to have, where it sounds like you are going to have youth on those premises, you're going to want to have some kind of hold harmless agreements, disclosures, disclaimers, hold harmless agreements. So if somebody does get hurt, that they aren't going to come back after you for that. And the insurance company can probably also maybe even give you guidance on what they would like to see in those agreements. And then, because it may actually be a requirement for them to offer the insurance that you're going to need.
Thank you so much.
Yeah, it's interesting. I briefly sold property casualty insurance. I didn't realize, we would walk into places and the farmers were notorious for doing their own work, which is good because it saves money. But sometimes the work quality was not everything that we would expect, especially when they were installing wood burning furnaces in buildings. And at first I didn't think much about it, but within a short period of time, I actually had 2 houses burned down in the same neighborhood I lived in, and they were caused by wood burners. One was actually a wood burning furnace, so it wasn't even, it was something that was there. And the other one was a wood burning stove somebody had installed. So things that we don't think about as being risky, and I never thought about it until those 2 things happened. I thought, okay, there's good reason why the insurance company comes in, and they would tell people, say, look, we'll insure the building, but you have to make certain changes here, for us to insure it. And they would give recommendations on what had to be changed. So because they want to provide the insurance, they just want to know what the risks are so that they can do it. And if they can make things safer for everybody, they will many times offer suggestions. So.
Thank you, Steve.
Well, if that is it, okay, I got one more new message.
No,
Looks
no,
like.
I was just going to say, I don't see anything else. So we'll give you a few-minute break and let everyone get to their next session while other people come in. But thank you for your time, and thanks everyone for the engagement. We appreciate it.
Thank you.
Bye.
Bye. I'll talk to you in about 4 minutes, it looks like.
Sounds good.
Bye, y'all. Thank you so much, Steve.
Thank
And
you.
the rest of the team. Appreciate it.
Bye.
All right.
Steve, let's
Welcome back.
we'll give it one more minute while people log on from the other session.
Okay.
Get started.
Okay. Now, is there a session, I'm assuming, after I'm done here? Or somebody, I mean, another session on something else? Or
Yeah.
is this it?
There, I believe, is a group session, and I'm going to put the link in chat for everybody at the end so that they know where to go. So I can finish up with that.
Okay. Just trying to determine how important it is that I end before 3 o'clock.
All right. We'll go ahead and get started. I know we used every bit of the time last time.
Yep.
Welcome, everybody. I'm Shonda Vega. I'm with Nationwide. I'm a sponsor relations account executive. In my role, I manage our relationship with the Ohio Farm Bureau. And together, Nationwide and Farm Bureau are the lead sponsors for this conference for the second year in a row. So we're just so glad to be here, and also excited this year to have some information to share with you on setting up and protecting your business. There's a lot of content that Steve's going to move through. Feel free to put your questions in chat, and we will save some time at the end to get to those. So I will give you an introduction of Mr. Steve Hamilton. He is a technical director with our advanced consulting team at Nationwide. He has over 30 years experience in the financial services industry. Also separate from the financial services industry, he is also a lawyer. So he has a lot of different initials behind his name. And he was raised on a farm in central Iowa, and he still has ownership in the third generation of that farm. He specializes in farm transition planning, as well as estate planning, business succession, and IRA annuity distribution options. Without further ado, I will turn it over to Steve. And again, feel free to put your questions in chat, and we'll get to them at the end. Thanks, Steve.
Thank you, Shonda. Appreciate that introduction. You know, we're talking about risk today. I think it's somewhat appropriate. It's 9/11, the 20-year anniversary. And, you know, I'm sure that, you know, many of us who were around then remember what we were doing when that was happening. And, you know, that was, you know, people didn't think about that risk at the time. Well, of course, about a year and a half ago, we didn't think about the risk of there being a pandemic and how that would change our world as well. And so there's risks that are out there. Some of those we can anticipate, and some of them obviously we can't. So we're going to talk about farm and ranch risk management, some things to look at, setting up and protecting your business. This wouldn't be a presentation without there being a disclaimer. So, basically, I'm not here to recommend a product. I'm not here to sell you, this is going to get you 12% return with no risk. If that product is out there, I haven't seen it. If somebody's trying to sell that to you, I'd run away from them pretty quickly. I'm not here to give you specific legal or tax advice. I can't do that. But I am here to give you some general information about things, and hopefully, I hope it actually stirs some questions up, because when you start having questions, then you start hopefully going looking for answers. And many times people get surprised about what happens, but it's because they never asked the right questions. So I'm going to hopefully raise some issues, some questions for you to ask, because you probably end up wanting to talk to an insurance agent after this to find out if what you have is correct or adequate, or maybe some other experts that are out there, or maybe you're going to check what you have with your current policies that you may be looking at. So Nationwide, just a little bit about Nationwide and who we are. We are committed to agriculture. In fact, the majority of our board members are active farmers. And you can see back to Farm Bureau's history that going back to 1909 in Iowa, which is where I grew up. I actually grew up in Iowa, that they started an insurance company to protect farmers because there wasn't insurance really available that considered what farmers' needs were and priced it appropriately for farmers. You can see that by 1926, Ohio Farm Bureau got involved and said, you know what, we're going to do the same thing. And they made a $10,000 loan to start Farm Bureau Mutual. Well, by 1955, the company had grown in product and in customers that they began to call themselves, they started to call themselves Nationwide. So they changed their name, became Nationwide at that point. And as they continued to grow, they acquired Farmland Insurance, which was a substantial, large agribusiness insurance company, century-old company, and a leading farm insurer. So with that in place, we obviously continue to make inroads and growth into insuring farmers and ranchers and those in the agribusiness. And because of that, we looked at the people we're dealing with and said, look, are they going to be able to transition successfully to the next generation? The majority of farms that are out there are family farms. They're operated by families. And so what's going to happen? We started the Land Your Legacy program, which I was involved in 2011. I've been working at supporting that and developing that to help people transition to the next generation. Today, we are the #1 farm and ranch insurer in the country. We are continuing to look at our products that we offer out there, for people. And so, we're looking forward to the future, what it is that people will need. How do people want things delivered? The kind of services and things that we can provide in the future for people. So we're looking forward to that. We're well positioned as a company. We're strong, we're secure, and I can tell you, we have gotten through this pandemic thing amazingly well, at least from the perspective I've seen and everything I've seen. And so as we look at, this is actually out of the Land Your Legacy presentation. I stuck it in here because we are looking at number 3 on this. There's 5 things that we typically try to cover in the Land Your Legacy program. Risk is one of those. So let's talk about some of the risks that are out there. So preserving the operation, improving its performance. We're going to look at primary sources of risk. These are some things that we are going to talk about. Resources. I mentioned already that asking questions, and I think that's important. And it's important that you find the right people to ask the questions to. If there's an extension service, find the extension service. Many universities will have an extension service that's available. Utilize those resources. They are a wealth of information. Insurance agents, obviously, but you want an insurance agent who's familiar with agriculture or the type of business that you are conducting or involved in. So, and you want them, I will say this, you'd like to have that person come out and actually look at what you have, all right? Be on the premises So they know what it is that you have. If we start talking things with finances, accountants obviously are going to be excellent people for that. If we're talking about you're going to have a business and you're going to have people on your premises, or you're going to be contracting certain things, then a lawyer. And believe me, no one likes to talk to lawyers or spend the money. At least that's been my experience. But spending some time and money up front can save an enormous amount on the back end if it's done correctly. So making sure that things are drafted correctly, set up correctly to minimize exposure can be just can save you a lot of money in hindsight, after the fact. Crop and livestock consultants, if you're actively got business going there, people that are experts there, livestock nutritionists, marketing specialists who can guide you, and then lenders. If you're going to be borrowing money, a lender can many times tell you what they're looking for. Say, you know what, for our best customers, we're giving this kind of rate. Well, who's your best customer? What do they look like? What's their finances? Find out what those requirements are, because you want to be a best customer of that lender if you need to borrow money. You don't want to have to pay a higher rate. You want to pay the best rate possible if you have to borrow money and get the best terms. There's production risk. If you're raising anything, there's production risks that are out there. And it can be anything from army ants, or not army ants, but army worms, which are coming through some fields here in Ohio. That's a pest. There could be the weather thing. I never heard of a derecho until my brother-in-law, who's farming the farm that I grew up on, experienced it last year. So we all heard of, the hurricanes now that's gone through and impacted certain people, and the droughts that are out west impacting some of the livestock production that's out there, as well as some of the grain production. Diseases. If you have any kind of confinement arrangement, we know that they can go through very quickly. A disease can go through and kill everything that's in that confinement operation. So diseases are very concerning, especially for those people who have animals in close proximity with each other. Technology is always changing. What you're using today may not be appropriate tomorrow. We have developments going on in genetics all the time. And I've seen recently that there's looking at a further development that could increase production on crops by 50%, and just improved efficiencies, with equipment and machinery, or how we actually do things. When we talk about risk and managing it, and I know there's 3 things up on the screen, but I'm going to say there's 5 really options you have. One is to simply ignore it. Just pretend it doesn't exist, and, kind of whistling in the dark, right? But that will definitely come back and hurt you, or definitely can come back to hurt you. Maybe you're fortunate and nothing ever happens, but it's definitely a potential issue. The other one is to avoid risk. And I mean in a good way. I mean that you've evaluated what you're doing, and you may say, you know what, this piece of my operation has more risk than what I can deal with or what I feel comfortable with handling. And so I would just not do that. I will eliminate that part of the business, or maybe I won't take on a particular business because of a particular type of risk that's there. And that's okay, because you've done the analysis. So you could reduce variations in your production and income. There's ways of doing that. We're going to spend a little time talking some about that. Maybe you put in better management practices, things that enable you to anticipate and manage things in such a way you've reduced risk, or you transfer risk, which is what we many times think about, because that's what insurance does, right? It's transferring the risk that you have to somebody else, an insurance company. Diversification. So if you think about things in economic terms, what are you doing if you are producing or selling this product over here and suddenly that market goes down, or there's no longer a market for it? Do you have something else that you can offer, that you can sell, to make up the difference economically for you and for the family, and for those that depend on you? And so, that many times involves diversification. So if you have, and I think about my own situation growing up as a child, we had diversification quite early. I think about it, we had corn, we had soybeans. Occasionally we would raise oats. We had alfalfa. We had a cow herd. We would feed out the calves. We would buy yearlings and feed out fat cattle. And occasionally we would raise some pigs. And that was pretty much the operation. So if grain prices were low, we were hoping that, livestock prices were high. We would help offset some of those risks because we were a very diversified operation. But within that, once you become diversified, many times that means you have to have different types of equipment for different things, different types of expertise. You have to have capital investment for the variation, very diversified operations that you have. So there is a cost with that. And so again, there's pros and cons to everything you do. You need to look at your specific situation and decide what's appropriate. Alternatives. We have seen more and more, I think, especially smaller farmers who are saying, you know what, I can't compete with 1,000-acre farms out there. It's just not possible at this stage, at this place. So what are they going to do? Well, they look at alternatives. And you may see this going on if there's a pumpkin farm. Somebody's got a farm, but now they're raising pumpkins and they're having people come out, to the pumpkin farm and pick out their pumpkins. Or maybe they've got, drove by a place in Michigan the other day, a weekend ago, and it said it was the largest corn maze in the United States. So they took their field of corn and they made it into a maze. And they're going to invite people to come out for that. That's going to be an additional business. Sometimes what we see people is integrate into something else. I remember talking to a Northeast dairyman, and dairy prices were not good. And they looked at what they could do and they decided, what we're going to do? We're going to go basically from start to finish, basically from field, in this case, cow, to table. And they do everything. They raise the cows that produce the milk, and the milk goes into the cartons, or the milk is used for ice cream and it's sold. And so they've got the full range all under their control from start to finish. But also a lot of people, especially couples, look at off-farm employment, because by doing that, they can have a steady income that comes in spite of the fluctuations that may be going on in the farm markets. They've got a steady income that they can use to rely on and live on, at least for the basics in their life. And also they have the opportunity to acquire health insurance, retirement plans, life insurance, or other benefits as well. And so those are great things to do. And many times that's what couples have to do to survive. And then also better savings and investment practices, just knowing to say, you know what, we're going to do some things. We're going to have some financial assets that we're going to put outside of the operation that will help us weather economic storms as well. Production capacity is something that you can think about as well. What's our capacity to produce? What happens if the weather is such that we can only put in crops for a certain period of time for only a couple days? Do we have the equipment? Do I have the manpower to get it all in within that time frame? And it makes me think, I don't know if anybody has seen this show out there. Somebody turned it on to me. It's called Clarkson's Farm. It's a British show, but it's on Amazon Prime. And if you want to see how not to farm, it is an example of not what to do in many cases. And they had an example where they had rain come in and they only had a few days and the problems that it caused. I will tell you that there is some adult language in it, so just be careful if that might offend you. Cost of maintaining that extra capacity, because if you have extra people that you've got to hire or extra equipment you've got to borrow or rent or buy, obviously there's higher cost with that, but there's a cost to not getting your crop in as well. Specialization is something that we're seeing, and partly because people can specialize, they can focus, they buy maybe just the equipment they need for it. You think about, especially in the Midwest here, where people do row crop. And so they got one combine, they've got two heads, they maybe have only need one planter because they're only using corn and soybean, and they can basically run their operation with equipment for just row crop, and that's it. But that specialization can obviously, if corn and soybean prices are terrible, then that obviously will impact it. They don't have the diversification. So again, weighing these options, looking at what you think is appropriate for your situation and how you can deal with it. Technology. We see increasing technology, especially in agriculture. They have right now equipment that the farmer can sit at their computer, as I'm sitting here right now, looking at a screen, and I can run the equipment from the computer. Now, that isn't out there yet for farmers to use, I don't think, but it's out there, it's available, or will be available in the very near future. And then also, I already made mention the technology around genetics and things that will continue to improve yields. But understand that many times this technology comes with a price. That technology may not, it may be obsoleted. And one of the old examples I have for those of us that are old enough, Betamax, which was a superior videotape, end up losing out to VHS. And of course, that's all gone. Now we went to CDs, and now that's all gone. And so technologies that may be great may not have staying power, may be obsoleted. That's a risk that you take. There was always this learning curve and learning how to operate and run this equipment and what to do with it. I mean, I know I couldn't plant today with the equipment that's in there. The technology is absolutely amazing that many of these tractors and planters and things have. And then just the unwillingness to adapt. We have to deal with that on a personal level. Transferring risk. You can, if you're marketing grain and livestock, you may look at futures contracts. You may look at puts and calls, options that you can put out there so that you know that you're going to get a certain price, or at least a price maybe within a certain range. And especially as a, if you've got grain or livestock, I've got a contract out there, I'm going to deliver it for this price, and that's the price I'm going to get. Now, obviously, there's a risk in that. The price suddenly goes up. Well, you have to decide what you're going to do with that contract. But it is a way of mitigating the risk out in the marketplace. Then for other things such as your property, you have life insurance, or you have property insurance. That could include property casualty. You have life, health, disability insurance. Those are coverages, obviously, to protect you or those that you care about are involved in the operation, as well as the liability insurance protect from being sued. And we'll discuss some of these in a little more detail. But when you think about farm insurance, look at all the words out there. That's kind of confusing almost, isn't it? It's kind of scary. But the point of this is to say there's a lot out there. This is why you need to have somebody who understands what you're doing, what you want to do, and your enterprise to help provide the proper coverages that you have. Very crucial, because you are not an expert, and we don't expect you to be an expert. Unfortunately, what I find is people become experts after something bad happens and they find out they didn't have the coverage they wanted. We want to avoid that. We want you not to have that experience. So you look at home contents, personal farm property, the tractors, the machinery, the equipment that you have to have, and then the farm structures. And you think about this, and this wasn't specifically a farm situation, but it points out the importance of staying current on things. Had a good friend of ours, he built an outbuilding, a substantial pole barn to put stuff in. And unfortunately, it burned down. That's when he found out that, he had coverage on his homeowners, but it was only based on a percentage of the value of his house. It was not enough coverage to build back the same thing brand new. And so if you're putting if you're putting buildings on, you need to make sure that you've got coverage for those buildings, unless you think, okay, I can pay for it out of my pocket, or I don't mind if it burns down. And sometimes we have buildings that we say, you know what, I really don't mind if that building burns down. It may not be a loss to the enterprise. In fact, it actually may be a liability. And so maybe we need to do something with that piece of property. But when you look at causes of loss, you look at types of policies that are out there, you're going to have sometimes a very basic, bare bones type coverage that may be adequate for you. Maybe you need something that's broad, that has some broader coverages, or maybe you need something that's specialized because of what you're trying to do. And so if it's specialized, you're probably going to be looking at, okay, what exclusions are here in my policy? What's excluded? And understand, that's one of the questions you should be asking. Well, wait a minute, what's excluded here? And find out, because you may want to then put an endorsement on it to make sure, I've got a risk here. I have people coming on my property. It's part of my business that I'm doing here. And if they're coming on my property, then I need to make sure I've got an endorsement. If I'm selling a product, I need to make sure I've got an endorsement to cover that. So if I get sued because of a defective product or somebody gets hurt on the property, I've got coverage for that. So making sure you have coverage that fit your situation. So let's look at some of the general liability coverages that are out there. Basic premises, right? This is what we usually think about when we think about somebody slipping and falling and suing, or maybe getting bit by the dog. You know, having this liability protection, so if somebody comes on the property, something happens to them, you've got coverage, you've got protection with the insurance company. If you have your business operation that's out there, okay, again, if you have people coming on the property or you have a hired hand, we have liability protection if something happens to them. So it's part of the operation. Yeah, what happens if you're driving the tractor down the road and you get rear-ended by somebody, or you happen to hit somebody, you happen to have an accident, something becomes disconnected from the tractor and causes an accident? Do you have operations liability protection in those situations? And again, if I'm selling a product, do I have product liability coverage there if something happens? We had here in Columbus, we had an ice cream producer who had vending ice cream, and they had a bacteria get in and cause illnesses, and it really caused an issue. And I'm assuming, I hope they did, I'm assuming they had liability to help cover that, but basically they end up selling out that business to somebody else, still using the same name, but somebody else is now the actual owner of it. Pollution and liability. This is more and more a concern out there, because if you're involved in agriculture, you probably have fuel on the premises. You may have a fuel tank that's underground that can be an issue. You probably have chemicals, whether it's something for herbicides or pesticides or fertilizers, things that may be okay if they're applied correctly, but we don't want them getting the water supply, right? If that washes into the creek somehow, then it may be causing damages. And the EPA has become, I think, more and more looking at what's been going on and trying to make sure that they're protecting sources from pollution. The marketing risk that's out there, if you have something to sell, you understand there's marketing risks that are out there, and prices can change, and there's variables that you don't control, right? You can't control the weather, and if a derecho comes through, you can't control that. Government actions. If the government decides that they're going to take certain actions, that can impact what happens with your product pricing. The prices of other commodities. If the corn suddenly goes up, people may look for other product that they can use. You look at the oils that are out there. If I'm selling soybeans and the soybeans go up way high, and people say, you know what, soybean oil is too expensive, I'll buy corn oil, or I'll buy vegetable oil, or I'll buy canola oil, or I'll buy olive oil, they switch to another option. Currency values. If the dollar is strong, that generally means that we are not as competitive in the world market than if the dollar is weak. And that just leads us into the idea that, understand, we are in a global market. We are not just impacted by what happens here in the United States, we're impacted by what happens around the world. I remember when my dad was looking at things, he'd look at what was going on in Brazil. What kind of weather were they having there? What kind of crops yields were they having? Because what happened in Brazil would impact the grain prices that he might get for his corn and soybeans. So if you're thinking about this, if you're raising product to sell, you should have a plan in place. It doesn't mean that you can't vary from it, just you can't be flexible. But the point of planning is to take out the two variables that will ultimately take you down the wrong path. And what is that? Those two variables are fear and greed, because people make bad decisions when they're fearful. They make bad decisions when they get greedy. And I don't know how many people I've talked to that they could get a good price for product and they didn't sell. Well, why didn't you sell? Well, I thought it was going to go up higher. Okay, you were making a profit at this price. Why didn't you sell something at that price? Well, I thought it was going to go up more. And then it ends up dropping, and they end up not getting maybe even a profitable price for it. That's greed, all right? And then the idea being that, well, I'm just going to sell everything because I'm fearful that the bottom's, everything's going to go bad. So we want to make sure that what you do is mitigate and deal with these two emotions of fear and greed. Put together a plan for marketing, what you're going to do and how you're going to do it. What do you want to sell for? Who you're going to sell to, and understand the quality of things, because typically things don't get better over time, but also understand that wet grain many times is going to have to be dried, or else you're going to get docked. And so again, looking at those kind of issues, and looking at the pricing. We'll look at marketing service. What are the experts telling you? The experts are not always right. Sometimes if we do what's the opposite, we may be better off at times. But understand what they're telling us and understand what they're seeing. Understand what the market conditions are around the world, what the dollar is doing, and what the government is doing, maybe with negotiating with China and these other places we could sell grain. Understand what's going on so that we can better position ourselves. And if you have to deliver it, what's the cost in delivering it versus the cost in storing it over time? All those things are things to put into a marketing plan and to consider. Financial risk, okay? There's financial risk that you have out there. And you need to make sure that you understand what the cost of capital is. Now, really, we've been in a very low interest rate environment for a pretty extended period of time. And I'm not here to debate good or bad about that. When I graduated out of law school back in the 80s, early 80s, interest rates were going way up. And so we had interest rates that were extremely high in the teens. And we have not seen that. But, using loans appropriately can make sense. But I am concerned that money has become so cheap and that people maybe it's been so easy for them to borrow that instead of using the money appropriately to make their operation maybe more efficient and more strong, so that if things do happen, they are in a position to withstand those disasters or withstand the things that may happen in the future, that they may be using borrowed money simply to cover over bad practices or bad management. And we don't want to see that, because sometimes that money at some point is going to dry up. And if you have not used that to become more efficient and more stable and stronger, then it's going to come back and bite you, like I did see it in the 80s. Even when people were borrowing money that had high interest rates, when markets changed and we saw land values drop 50% in some cases within a year, we saw people that were not able to withstand those pressures and go under. So borrowing prudently can make sense. Make sure you can meet your cash flows. Understand when things are coming due and when you're going to need the money to pay those things off. Maintaining growth and equity. So you want to be growing equity over time. You don't want to see the value of what you have going down. You want to see it increasing in value. And I'll tell you who's going to look at these things, or anybody that you're going to borrow money from. These things are going to be important. And also making sure that you have things situated in such a way, things that help you manage risk, whether it's crop insurance or some of the other things out there, so that you can weather short-term shocks. And that may include disability, may include health issues, long-term care, those kinds of things that can be shocks, to the operation that you're in. I'm going to say one thing here that can be a financial shock, is that many times farmers try to minimize their taxes, and they can do that by writing off a lot of stuff that they can do or going out by purchasing things. And I think it's important that you at least get 40 quarters into Social Security, because even though Social Security may deny a disability claim, if you're truly disabled, at least you've got some place to get disability. And if something happens to you, there may be insurance, there are benefits for the spouse and for children as well. So it's just another way of managing some of those risks that are your personal risk and risk to those that you may care about. Looking at financial records, because again, this is where lenders are going to look at you and say, this is something important to consider. The balance sheet, assets, liabilities, income statements. We want to make sure that we're seeing profitability over time. Cash flow statements. Again, seeing when things come in, when things are going to go out, so we can make sure we don't come up short. And something that shows us here, okay, here's the equity that a person has in the business. Here's what they're acquiring. Here's what they're growing. And you can look at ratios for this. Again, I'm not a big numbers guy, but I do think it's important that, especially if you're going to be talking to lenders, that you have these ratios in mind. One is just looking at your current liabilities and current assets, and you want that ratio to be somewhere around a 1.7. The other one is working capital to gross income looking at that, where you take your working capital, which is going to be your cash, your accounts receivable, your goods, your crops, your inventory, all that stuff that you have that's there, and then dividing that by, then looking at that working capital and dividing it by your gross revenues and saying, okay, what kind of percentage do we have here? And you'll see there that if you're under 10%, that's not a good ratio to have. These are things, that if you can talk to a lender about these things, are going to put you in better stead with them. And then farm debt to asset ratio. So, again, taking total debt to, looking at comparing it to assets, you're going to want about a 30% ratio on that. Legal risk. If you're going to have people coming on, or we're going to be do business, and actually we all have some level legal risk that's out there, but this is something you're going to want to pay attention to. If you have any kind of agreements with anybody, I don't care if it's a rent agreement, a lease agreement, you're going to maybe a purchase agreement of some sort of buy sell, you're going to want to make sure those agreements are set up correctly, because a handshake and memory will not cut it if things go south. Business organizations can be great, because if you've got an enterprise, an operation that's doing this, we maybe can put that in an LLC or a corporation of some sort, set that separate from your own personal assets, divide those things apart. So if one gets sued, the other one is protected, and vice versa. The idea is, okay, we are going to separate what I do personally from what I'm doing in business. And we're going to set up an entity particularly for that. And that can many times help a person also separate that I got to run this as a business. This is not me. This is a bit separate business. I need to do certain things. This is me over here, and I can do certain things within that. Many times what I see happening in small businesses is the things get so commingled that there's no way of separating them. That many times cause problems. Laws and regulations, obviously, we always have to be aware of what those are. I'm trying to put a pond on my 10 acres here. I have to deal with the conservation people who are very concerned about, well, what will the EPA say and who will do this? And so I don't know if it's going to happen or not because of regulations. Tort liability, what you're going to get sued for, what are the liabilities, what things, how can somebody get hurt? Have I gone around and looked at how somebody maybe can get hurt? Public policy and attitudes. We see more and more people going through, okay, we want, we want to protect the environment. We want to eat healthy. Those are all good things. You may be out in the country, but now the city people are moving towards the country. How are they going to perceive the fact that you're driving the tractor down the road, or you have livestock that maybe smells? How are they going to deal with that? Those are all potential risks that you need to deal with. And then we have to deal within our own family structure, right? The people, and I would say the people that you work with within this business or structure. And what I tell people in the Manage Your Legacy program is take a piece of paper out, draw out your family, put your family diagram on that piece of paper, and maybe whoever else is employed or working with you, put it all out there and say, what happens if something happens to this person? What happens if something happens to this person? What do I want to see happen? And go through the process of saying what happens if they retire, they become disabled, they die, they have a health issue. Go through and think through that process. What happens if there's a divorce situation? I know of a situation, and this is a long time ago, so the dollar amount would be greater today in today's dollars, but a divorce situation within a family operation, it took $500,000 to get that spouse out of the picture to become an ex-spouse. What have you done? And maybe setting up a business structure that says that, you know what, there's a buy-sell arrangement in place, or there's something here that restricts ownership only to family members, so that we don't end up with a non-family member possibly owning some of the shares in this operation. And then making sure that if something happens to us, we have things in place, whether it's records, it's finances, it's training and management, so that if something happens to me, somebody else can step in. When my dad had his accident on the farm and passed away, my brother-in-law knew how to manage it because he'd been managing the farm. My dad had taught him. And also they had financial situation in place with life insurance so that they could weather the storm of losing that important person in the operation, my dad. And so having that in place so somebody can step in, you need to make sure you got two things. You need to have management, you need to have money, finances to maintain it. And that will take you to thinking about succession planning for the future. What are you going to do for the future? And unfortunately, this is a risk out there too, especially if your family is relying on this enterprise, and especially if you have a child who maybe wants to get involved with it. And unfortunately, 50% of people out there, they say don't have a will. And 71% of farmers and ranchers out there involved don't have anybody to actually take over. They don't know who's going to step in if they don't show up the next day. And they may not show up just because of death or disability. They may just want to retire and step back a little bit. But who's going to step in and take, continue that enterprise? Because by appropriately planning, you can reduce some of the liabilities that are out there. You can reduce, as we've been talking about, some exposures to risk out there. And you can make sure that the things that you've worked for and you've acquired and that you've built up go to the right people at the right time in the right manner that you desire them to receive it. And that can give you the assurance that the business that you've worked for, that you've created, will continue in the manner that you desire. And sometimes I have people say, look, I'm going to just get out of the business. Well, that's fine, but make sure that you understand the tax consequences, because there are things that you can do to least reduce or minimize taxation when there is going to be a sale, when you are going to transition out of it within the process. I think I've taken up all of my time. We want to leave about 5 minutes. It looks like that's there for some questions for you to meet the other, to go through and get over to the next event. I guess this will be happening, but look at this screen here. If you have any questions, if you want to get in contact with an agent or find out what Nationwide can provide you, there's a number there. Nationwide.com is a resource. And also for farm insurance specifically, farmagentfinder.com is also a resource as well. Please, take this information down. Even if you don't think you need it right now, you may need it in the future. But I want to wish you all the best with the day and the rest of the weekend. Thank you. And Nationwide, we definitely appreciate everything that you guys do out there working and feeding us in agriculture as well. Thank you.
Thanks, Steve. Does anyone have any questions that you want to put in chat? I don't see any right now. Give it a moment. And just as a reminder, 3 o'clock, there is another keynote address and a facilitated discussion at 4 o'clock. So I put that Zoom link in there for those of you that plan to attend that. Not seeing any questions.
I never know if that means I've totally confused everybody or if it's understandable. But I do appreciate those of you that have taken the time to show up and to listen to this topic. Somebody said we need to change the title to make it a little more pizzazzy, but I won't repeat the names that they were saying.
Oh yes, on the last one, yes. Awesome.
Yeah. It said you can lose everything. Well, it wasn't quite like that, but something similar to that.
Marcella just said insurance for collectively owned land. I don't know if you have perspective on that, or if that's more of an agent specific question that they would need to ask.
Yeah, I mean, if it's, if you have a bunch of joint owners or co-tenants on property, that definitely has its own special risk, because if it's everybody personally owns an interest in that, so you've got everybody's risk associated with that. So yeah, you're definitely going to want to look at insurance on that and how that can be structured. I might look at it from a legal standpoint and say maybe we're better off setting this up maybe into some kind of an LLC where we can limit liability. And so instead of everybody owning everything with an undivided interest, which is many times how, if it's owned joint or with right of survivorship or as co-tenants, we now hold an interest in an LLC, and then we have units. But then that way, if somebody gets sued individually, that asset, that land is protected from their individual, any legal battles they have, whether it's a divorce or a lawsuit. that interest that they have in the land would be protected. And also the same way around, if something happens on their property and they sue because of the liability, because something happens on the property, the individuals would have individual protection as well. And so I think looking at an entity to hold that is one thing that you can consider. But yeah, that would be an individual insurance agent who could talk about, say, well, maybe we can get protection on each of your individual policies somehow to make sure that you're protected from a legal action on that. Because my guess is that people probably have homeowners insurance, and the insurance agent may not even know that they've got a liability or exposure on another piece of property out there. So they're going to want to make sure that the individuals talk to their agents about that coverage. But I do think looking at a business entity may be also something to consider.
Steve, we have one question come in from Gina. First of all,
Okay.
she said great presentation. So thanks, Gina. She said,
Thank
what
you.
is the overall financial health of agriculture in Ohio with small farms? Do you have a
Wow.
perspective on
I don't,
that?
Shonda, you might be able to answer that better than me. I think small farms, this is totally subjective without any basis. Okay. I just feel like small farms are in a tough position. I know my brother-in-law who's farming the family farm, and actually we've grown the farm some as far as acquiring some land and renting some ground, but he doesn't feel there's any future, at least in row crop, for the next generation. And that's one of the issues that we're dealing with as a family. So I think within, I think there's still an opportunity for smaller farms, but I think it's outside of what's been traditionally done. And whether that's, growing things that are sold, then people may not be able to make a true full living off of it. It may be part of a business where they're growing things for the farmers market, where they're growing produce that they can sell that way, whether they're doing something where they're having people come on the property. We talked about the pumpkin patch, the corn mazes. We actually have a sniff spot here, which I never heard of that. Believe me, we're not going to make much money from what I can see on it, but we have some ground and it's fenced in. And so people are bringing their dogs and paying us to run their dogs around the property. I think there's opportunities in maybe what we call non-traditional areas that are available, but it's going to take some effort, I think, for people that are smaller farmers. And I'm not sure how you define smaller farmers exactly.
Yeah,
to make a living. I don't know what you see, Shonda.
Yeah, I mean, I think that there's some, with the beginning farmer tax bill and things coming out, I think that there's some genuine help. I know Farm Credit Mid-America has a great program also for beginning farmers to just really try and set people up for success. I don't think any of us want to see the small farms disappear. So I think there's a lot of effort out there, being created and legislatively and with, I know we're always trying to educate and communicate, and the ag lenders are as well. Farm Bureau is probably also a really good resource if you want to hop on their website, ofbf.org. They've got some good resources as well. But I know we're past our time and you guys are already late to the next session. So thank you, Steve.
Thank you. Appreciate it.
And
You guys have a great rest of your day and great best for the rest of the sessions. So thank you.
Thanks for having us.
I'll get out of here.
Bye.